Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today's focus is strategy webinar, always on Wednesdays. Thanks for joining Admiral Markets and myself. First of all, be aware of this disclaimer. It explains that this video and of course live webinar now is shown to a global audience but may not be suitable for everyone. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details on that. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Sorry for that small delay there in the start, but we are going to finally kick off and take a look at the following things. Trend and momentum, first of all. Secondly, look for patterns, basically. Third, see if there are any filters like support or resistance levels that could block a trade from materializing. And when all that is good to go and there are green lights for the first three steps, then I'm basically looking at the path of least resistance to find out where the key decision zones. And when I identify them, basically I'm waiting for price to get to those zones and then looking for triggers before trading it. All right, yeah, if you want to contact Admiral Markets, by all means, use this info. To do so, of course, you can find more info very quickly by going to the admiralmarkets.com website. Just a quick note before we take a look at the live markets and live price action. I wanted to make you aware of the Zero to Hero trading course that's available right now. It has kicked off, started this week on Monday. There are 21 days that take you from relatively basic concepts all the way to more advanced concepts. So it's a quick pace, covers a lot of ground, but it's intense, but it's not elaborate, right? The videos are 20 minutes. You got some follow-up videos, optional if you want, as an extra to learn certain things in more depth if you want to. But the videos are really concise so that it's to the point and quick. Time is of the utmost essence, especially nowadays. I have a feeling, well, probably everyone does, that there's little time for everything. I think there are so many options nowadays that that might, you know, that might create this feeling of lack of time. In any case, if you're interested in this course, Zero to Hero, click on more info. It's for free, by the way, as well important. Nennet and I have completed the course like 1 or 2 weeks ago, so it's all new material, and you can check that out there. All right, regarding the Forex calendar, or risk calendar in general, I should say, economic calendar, we have ADP today, I think, for the US NFP on Friday, as you know, but check it out and take a look yourself to see what kind of, events are coming up. Of course, pound has retail sales. No, sorry, has PMI. The euro has retail sales, etc. All right. Let's open the charts. Yesterday we had a webinar on complex corrections and wave counts, and yeah, it's an hour seems long, but then again short if you really have a lot of things to say, and maybe we dived into too many details at times about why I think that wave analysis is good for general traders speaking. So there could be some topics left. I got a great email from Nathan, for instance, with some follow-up that he would like to see. So I'll dive into that in more detail with him, and maybe next week or the week after, I think that we'll give an extra follow-up on that. So I'm looking forward to that probably just in the Wednesday strategy webinars. But for today, we can use the waves kind of as a guideline in the background. It's not going to be the main thing. We will talk about it though together with fibs, candlestick patterns. We're going to look at market structure basically in general. Market structure, of course, three things: trend and momentum, point one. Point two, support and resistance, of course, and point three, patterns. Patterns like wave patterns, chart patterns, candlestick patterns, time patterns, And on the other patterns you might be able to identify or have heard of. All these are, any repetition basically is a pattern. Now not every pattern is worth trading, by the way. You know, there could be the pattern that, for instance, the euro dollar moves up 9 out of 10 times when Sunday is cloudy. Well, that might be so, you know, for 1 year, but would you really rely on that pattern? No. So, you know, some patterns, of course, obviously do not make sense. All right. With that said, euro dollar was a bit early, obviously too early looking for the bullish reversal. I was hesitant, as you might have noticed yesterday, about trading the euro dollar in general. I thought it was a bit of difficult structure to trade. Ultimately, this bounce kind of tempted me to think about a reversal. But one thing, though, to note is that here, as it tested the bottom, right, it kind of made a dash down to this bottom here with a bearish candle. It didn't really make a W pattern here. Now, it's a small difference, granted, so that could be tough. Anyone, you know, trading this potential reversal would have been stuck probably with that trade, because after that, basically price made a correction, continued one more low, and then we got suddenly a big upside of about 100 pips, right? Relatively a lot for the type of movement that we've seen on the euro dollar recently. It's been quite slow. All right, so what next? Well, this is a very complex correction. We talked about it yesterday. And it is, here you can see on the 4-hour chart, even better. Very, very sideways. This range is, well, practically speaking, about 150 pips. The most of these tops and bottoms are within that narrow range. Price is about halfway. Is it interesting to trade? I would think not. Do I have an expectation what price could do? Yes. Based on wave analysis, I think that there could be an ABC up to about 112.75, and then I would expect the bearish impulse back down. Is that very interesting to trade? Is this a wide open space? When we look at the path of least resistance, right, I always look at decision zones, and then I try to analyze what kind of space is between those zones. And if I analyze it here, I think that the space is small and it doesn't seem appealing to trade. On lower time frames, though, if you're really a euro dollar fan, let's say if someone is a euro dollar fan in general, you know, or maybe in some cases only trades the euro dollar, then you don't have much choice. That's the disadvantage of, you know, trading one instrument rather than looking at a broader kind of focus of the market. But some traders are like that. There's an advantage because you really know the euro dollar inside out. That's an advantage. All right. So in that case, personally, I think that there's still an ABC potential here, but you know, it's really, really difficult market. I think very important to get confirmations with candlesticks. So if it does fall down to these fibs, I would definitely need a candlestick confirmation here on the hourly chart, 4-hour chart, maybe to see a bullish candlestick pattern here before I would think about trading a potential upside up to that 112.75. Alrighty, pound USD. Next on the list, let me quickly check these pivot points. If they're daily or weekly. These are daily. Let me quickly make them weekly. I'm just curious because price has already made a substantial downside. I'm just curious how far. Oh, look at that. These are the weekly pivot points, way below S3. That is quite a move already. That kind of confirms what I was thinking. Let me double check. Yeah, they are really weekly. Wow. You can see price starting basically below the pivot, quickly moving below the S1, kind of staying at the S2. That was yesterday. And the break of S2 was a good trade to the S3. That's the one that happened before our webinar actually yesterday. So we couldn't discuss that. Now it's even breaking below the S3 with new momentum, quite substantial here. So unfortunately that happened already again before the webinar. So not much we can do about that. But we can take a look at now is monthly pivot points. Let's see how far that is. Month just started a few days ago. And from that point of view, we can see that there's still space to 125. What is it? 75. The next fib target I have in mind is 125. It's below 127 at the moment. Yesterday, it not only broke, on Monday, it broke 128.50, which was a key level from my point of view. I talked about that in Monday's video, 128.50 key, broke below that. But not only did it break below 128.50, but below 128. And why is 128 important? Because 128 is this bottom. We talked about the daily candles closes needed to be near the low. It happened on Monday, and it happened on Tuesday, and now it's moving lower again. So it looks like a very impulsive piece. Now, unfortunately, at this moment, there's really no action to be done, I think. But let's take a look at the waves to see quickly here. All right, so what kind of potential there is. From a 4-hour perspective, this when it broke this support level here, it is basically a wave 5 most likely, but within the wave 5 we're seeing extension, all right? So this is being extended with more impulse. So let's take a look at the hourly now. And as you see here, the green 3, the green 4 was finished, and now within green 5, most likely, we're seeing a 1, 2, and we're seeing a very extended 3, a very strong third wave. That third wave was tradable at various spots. Now, I didn't like this one, I believe, on Monday because it didn't break the 128.50, but when it broke below the 128.50, I changed gears. This break was definitely tradable from my perspective. At this point, so this one not, but this one yes. At this spot right here this morning, I was expecting a correction within wave 4, for price to get up to 128, back to 127.90 or 128.30ish. Now, did it get up there? No. We'll take a look at live price action right now. It went up only to 127.40. So I wanted actually price to get up roughly between S1 and this pink level here, to retrace a bit and then fall. It didn't do that. So from my perspective, this momentum is still onwards. You can see that the oscillator is still pushing, but the oscillator is getting back to the zero line. So although, I missed this continuation, I don't want to chase the trade. I talked about it we talked about it in webinars in the past, chasing the market and jumping the gun, for instance. And I'm not saying it cannot continue, but I think it's chasing it if the trade is taken now. I still rather wait for the correction. Let's take a look at how many pips this has fallen. About 330, all right. So yeah, it could fall, right? Another 40 pips. I'm not saying it's possible. So let's dive into a 50-minute chart. But eventually I do expect a bigger correction. A correction that goes back to 127.30 now. Might not get up this high because now we have a new resistance zone above us, but I would not trade it back up, no. Because at this moment, I don't think that this particular level is a great turning spot. It could turn here, it could continue. I don't see benefit to either side at this point. That's annoying sometimes indeed, but sometimes best is just to stay out of market and be neutral. There is divergence here between these bottoms. One of the reasons as well that I expected a bigger correction this could be double divergence, which means that yeah, there is the potential for price to make that correction. Let's put on the long-term moving average and get back to the long-term moving average and S1. But as I said, I don't know if it's here. Why would it be here? Maybe 127 psychological level. I don't see necessarily. Well, maybe you do. If you do, let me know what kind of levels here, what kind of confluence you think is big enough. The 1 hour for forward turn, we can analyze that and review that. I don't see that. I see a pretty strong candle. That's not everything, but at the moment, this hourly candle is dominating. And if anything, I would expect maybe a break of that low before we see a failure, and maybe then we'll see the bigger move up to the S1 at about 127.70. But don't get me wrong. This is definitely bearish. And considering the momentum here that we see, I would expect a correction and definitely one more push lower and one more lower low at the very minimum, if not more. This has been a grand momentum. So what I would expect is this to go back to the zero line, this to correct a bit longer, and then to get that push again. All right. Now, if you are reversal oriented and minded, what I would at least want to see is a failure to continue here. So what I often use is my time factor rule, 5 to 6 candles not breaking a bottom, this turning back up with green bars, 3 green bars preferably. That means that this is double divergence. In that case, there's a case to be made that, like this, for instance, that it's showing a W pattern of weakness here, and there could be an ABC zigzag up, for instance. The alternative, of course, could just be simply a bear flag as well, like this. All right, so if that happens, you want to move it to break even and take the risk off the table. Because if this breaks, it's more interesting for shorts, in fact, if the bear flag breaks, right? And that could very well happen. It's just that if this would be a key level, a key market reversal level, I might be worth thinking about trading it even now. I'm not that confident about this pound at this moment, considering all that bearishness. So for me, I would need to see more confidence in a reversal trade. Dollar yen moved up. Great stuff. Continued. We talked about that. Let's take a look here yesterday about the potential continuation. So yeah, small zigzag here, but that was before the webinar. Then after the webinar, I said look for bull flags. We had one small one here on a 50-minute chart. That was maybe even better to be seen on a 5-minute chart. Right there. Small bull flag. Break of the bull flag. And we got continuation upwards. That's all within a wave 3. And all part of a bullish momentum. So we are seeing strong momentum. There's no divergence as expected. But there could be the start of a wave 4 at one point or another. So for the moment, let's take a look quickly at the 1 hour of the dollar yen. Sorry, folks. Okay, well, it's not cooperating, but anyhow, I think that this fib is the best fib at this moment when looking at the wave structure. And if a wave 4 is starting, then I think I'm looking at the price to rally or bounce, I should say, off of these fibs. Could it be making a retracement here? I think there's a good chance. Right, the Alcem escalator is on its way back to the zero line. Price is struggling here. So yeah, there's a good chance it could make that retracement. Am I interested in trading it to the downside? No, because I'm expecting a wave 4. That's my wave analysis. There's very little space to the downside here. Is that a open space? No. That's a small space. And I think the likelihood that this is a wave 4 is high. So when you consider those two factors, I'm not interested in trading it to the downside. And I would be interested, though, in trading it once price gets down to those fibs. And I see a confirmation of price turning at those fibs. That's my preference. Sometimes I do use pending orders if there's a very, very strong case to be made. 102.50, 102.25 basically, expecting a turn, and price to go up to 103.50. That's the first target for the dollar yen in my view. All right. Yesterday, I mean, from a daily perspective, I've always said, keep a lookout for a daily candle above this downtrend channel. This downtrend channel, folks, as you know, has been on the table for very long. The channel itself since 10 months ago. The downtrend really started already back, let's see, almost 1.5 years ago. So this candle breaking above this channel is a big thing and could indicate the first kind of daily confirmation of an uptrend or at least a bullish momentum. So anyone trading daily candles, I consider that an interesting candle. I would consider that an entry. I would go with the stop loss below the daily low. The entry could be right here. Other way could be to put a fib on that daily candle itself and look for an entry at the 23.6 fib, which already got hit, or the 38. The target, conservative target, would be putting a fib on from here to here and looking for 105.50, 107.20, or 109. It could go further than that. We talked about it yesterday. That price could go easily to the 50 fib of this swing high, swing low, which is at 112.50-ish. But 109 could be a substantial pause, just like 105. 105, 109, 112.50. 110, of course, too, psychological round level, logically. All right. Those are some targets there to the upside. That's a daily breakout as it's happening right now. Now, channels breaks are one thing, of course. Basically, once price breaks above 104.25, then we'll also have a higher high. That's when we might start thinking about an actual uptrend. For the moment, we couldn't say that. But this is an entry from my point of view, it is a daily entry. It's a daily reversal trade. And I'm expecting continuation based on that candle. A small correction here at max before I would expect price to continue higher. Alrighty, Euro Yen, just like the dollar yen following suit. Of course, Euro Yen really flying up a bit more than the others because the Euro dollar moved up a lot. Plus, the dollar yen was moving up or going sideways. So the Euro Yen not only reached the 61.8 target, first the minus 272 target, then the minus 61.8, but continued and is accelerating in its momentum. So pushing up higher and higher. That happened yesterday. Yesterday's candle very strong. And for the moment, yeah, there could be just a continuation potential there as it goes with the dollar, yen, and even the euro dollar, right? Could make an ABC up. So for the moment, though, I would say it too, I wouldn't be surprised if it makes some correction at this point. I think, well, let me say it this way. I'm not sure if it will make that correction, but I'm not interested in trading it without it at this point. Here was a good little bull flag, by the way, right? And that broke a bit later in London in the New York session as well. So perhaps you were looking at that break. That was a good trade. Something like that is very pleasant. This moment, price is kind of like making a push like this in the channel. There's divergence. Dollar yen is perhaps making, obviously, there's a good chance of a wave 4 correction. I don't think it's a good moment. I know. So let's continue. Pound yen. Not much there in my view. It's respecting the pivot point. So engulfing twins here could be a signal for short. These are engulfing twins, respecting the pivot point. So that's one thing to look at. I mean, all in all, it is obviously in a bit of a tight range here. So it's not a great thing. Let's see if there's something better. All right, Aju is I talked about the head and shoulders here yesterday and the fact that there's a good chance it will bounce off this resistance trend line and make a dash down. Now, the 4-hour signal that I was talking about here didn't really emerge. This was a pretty big wick. I was looking for a close down in here. So that signal really didn't materialize, unfortunately. The next candle was bearish, though. The wick was slightly lower, slightly less. Not a great signal either. So that's a bit of a shame because after that, it did follow up. But yeah, those things happen sometimes. Ultimately, the pattern did play out, though, not really with the confirmation I was hoping for. I think that price could reach the 50 or one of these fibs and then make it bounce again. Let's take a look. 1-hour chart. Got to realize, though, that we're still at support level right here. Let's take a look at some of these oscillators. Oversold at the moment. Oh, 1 second, folks. Let me reboot. In the meantime, yeah, this oscillator is showing a bit of oversold there, logically on a 50-minute chart. I'm contemplating if that could be maybe a bounce. It seems like in the middle of nowhere to me, to be honest. It looks like I'm a bringer of bad news with all these market updates. I don't see any opportunity as yet, but we'll continue. These are Admiral Keltner and Admiral pivot points, by the way, and it's getting close to the S1, which could be a bouncing spot. This is the mini terminal of Admiral Markets MT4 Supreme, by the way, as well. All right, let's continue. One more thing I've mentioned yesterday, but wanted to add today, by the way, is that Admiral Markets won an award just like last year for Best Broker, but this year for Best Educator. So we're very happy to hear that. Nanette and I, but also, of course, others. Admiral Markets, there are also a lot of local educational webinars and analysis. So that was really happy to hear that. Prize was given in London at the UK Forex Awards, so that was great. Kiwi made a huge downside, contrary to the Aussie. Well, the Aussie made some downside, of course, as we know, but the Kiwi even more. Just like the pound, the euro was the only one that really reversed strongly to the upside. And the Kiwi I was hesitant about this because of this large correction here, ultimately though breaking the trend line and making a huge dash down. So that was a great trade. At this moment, if you caught it, at this moment, I think it's still ready for more shorts. Let's see. There were some small bear flags here, here, and here. This was sideways flat. Yeah, let's take a look how many pips it traveled. I'm trying to calculate how many pips it could still move down. The thing is, once you get a break of the break of the break, it's probably better to expect a bit bigger retracement. It's kind of the theme of today, isn't it? Price moved 144 pips on this lower time frame. So let's see, that is level 1, 2, 3, 4, 5. So that's already quite substantial. From that perspective, let's see, 55 for retracement would bring price back to this bottom, the broken bottom. I think that probably makes the most sense. Price to get back to roughly 72, 72.20. Roughly in this zone where the pink lines are, probably with an ABC. Here I would be looking for turnaround back down. On the hourly chart, probably what I would expect is about a half a day worth of price action before it hits that zone. So let's see if that materializes. Let's see, Craig is asking why the New Zealand dollar is being so bearish. Doesn't seem to be any economic news to indicate why. That's a good question. I also was wondering the same. I think that the dollar was strengthening, but the euro was the only one not following suit. The gold also fell a lot. We'll take a look at that in a second. It could have been Euro news that was the exception here. Something maybe about the banks, of course, that are highly in the news during this, recent period, basically. And that could have been the up and down here. The dollar strength could have been the downside, but some banking news could have been the upside for the euro, perhaps. Thanks so much, Craig. Craig is congratulating us. Really happy with that. Appreciate it. And Craig says that he spent a month reviewing brokers and it paid off when he found out more markets. So it's really kind words. Excellent. I'm happy to hear that. And I hope that you'll have great trading and that the website will help you with software and analytics and education, etc. And we always appreciate to hear that and stories like that. So anytime you want to share that with us, we're always all ears, of course, because this is the main thing. This is why Admiral Markets is here, is to make the pleasant experience for traders, right? But ultimately, this is what it boils down to. All right, Euro Pound, big daily candle break twice in a row too, just like similar to the pound basically. But then the reverse, of course. All right. Yeah, it's It's been traveling. 90 pips for the euro pound. That's a lot. We talked about this candle breakout yesterday. Good candle close. That could be the breakout. There was some few hours that it took before it continued. Ultimately, it did. And this is a rocket to the upside. Now, the thing is with rockets is that they, at least in the Forex world, they will have to make some retracement. Yesterday, I think there was still good upside potential after this bull flag. Now, we're already basically in the break, after the break, another pullback break, continuation, and even another break. So it's the same kind of story. It's the same kind of problem as with the other pairs. It's kind of the motto, really the motto of today. Euro odd is, so here too, with the euro pound, I think that another bull flag is needed. Now let's talk a bit more in depth perhaps about whether trading a bull flag makes sense. If it builds a bull flag, does it make sense to trade it? Let's talk about that a bit. All right. Looks like we're pushing above this resistance. Making a higher high. I think it does. Let me just add this template here. This should be weekly pivot points. But I'll double check that. So yeah, of course, then this week might still see one more push up after the retracement, after the bull flag. But be aware that next higher high or double top, by the way, might be it for this week. You know, it's reaching really a far level if you look at that R3. I just want to check if it's a daily or weekly pivot point. Obviously, it's very close to that. So our expectations of how much upside is remaining is seriously hampered by that. Yes, it is a weekly pivot point. So that makes it a bit less interesting. Yes, if it makes a bull flag like that, one more upside could easily occur. But that would really be the max for this week. Then we have to see how this weekly candle closes, right? This weekly candle. If it closes with the close near the high, then that's basically a breakout of this resistance. Next week, we could see a retracement and continuation. Alrighty, pound odd is back in the moving averages here. So that could be an opportunity. Similar to the very light pullback here. This could be a pullback for more downside. So that's maybe one of the few things that could make sense. Yesterday I had a wick. It looks like we're getting a complex correction. This is looking like a correction. This too, and let's see. I would probably want to see price make one more dash up to retest this top or this target. That's 164.20 or 167. Sorry, 167.40 or 167.70. Ultimately, though, I do think that this is a correction for more downside. The thing is that that correction seems to be expanding. All right, the New Zealand didn't get the zigzag I was expecting. And one of the clues that we could have, expected that was this 4-hour candle. That's a strong candle. That candle close, that size of a candle indicates momentum. In that case, resistance becomes less important. And there's a good chance of break. So the New Zealand didn't get the reversal as expected, but there was a candle that really gave us good information about that. Oil seems to be continuing its march higher, just day by day, pushing higher as it breaks this triangle. DAX struggling with the resistance here after a substantial rally, still within this wedge. Gold, very bearish day, very big bearish day, very bearish close in the low, totally destroying the support here that we saw. I was warning yesterday, don't look at it too simplistic as a bull flag because of divergence, and to me it seemed like a bit of a warning signal here. Yes, it could be a bull flag. Of course, it looks like a bull flag, but the thing is, this is a pattern that is occurring with divergence after a substantial move up, and a retracement seemed likely. This seemed more like a start of retracement. Silver 2. So let's talk a bit about that. I think that this obviously strong momentum. I think the light pullback here is probably more than enough before it will continue with its fall. This is most likely a wave 3 push, strong momentum. At best, this would be a light wave 4 correction to indeed the 23.6 or 38.2 fib. Perhaps a bear flag like that, and I would expect more downside. S&P still between that, those trend lines still within that triangle. And yeah, that's a quick look on some of these commodities and its indices. Can the Fibonacci tool, be employed when the prices are trading in a range, or must it be in a trending conditions? It could be used in a zigzag when price, for instance, is correcting within a range like this, and price is making like zigzags like this. Yeah, that's possible. I mean, obviously, definitely, without doubt, fibs are the very best in trends. That's when they really have the most value. In ranges, generally speaking, not so good. In fact, if price is really, really impulsive, it will just do this more or less. Well, then the fibs have very little value. Then it's best to zoom out a time frame and see what's going on. What does this complex correction mean? Maybe there's an impulse prior to it on the daily chart. Let's take a look. Let's say that this is the 4-hour chart, right? We see just moves up and down. Fibs in that part would probably not be any use, right? But if we zoom out, then we can see the impulse prior to it. Then we can put a fib from the bottom to the top, and we see that price was respecting the 50 fib here. And there's a target up in here. That gives us some value. Or perhaps on lower time frames, right? Within those ups and downs, maybe there's a smaller zigzag within this part, right? Where I have within these ups and downs, right? There's maybe a zigzag within it. So if we zoom in, maybe we can put a fib on this first part to get the next target here. It's possible. You got to be careful though, I would say, and best definitely with trends. By the way, Craig is saying that he's really enjoying the Zero to Hero course. So very glad to hear it. Once again, if you're interested in that, feel free to let us know and join by going to just the website ivanmarkets.com and clicking on the free registration button, or first more info, and then on free registration. It's day by day, by the way. 20 days. It started Monday. Today is day 3, and every day there's a part of this course released until the end of the month. Is the fib tool that I'm using? It shows levels with prices. Yeah, great question. It is actually something that every fib tool can be added. What you want to do to add the price levels, was, as you can see, indeed, not only do you see the fibs here, but also the price levels right next to it. So what you need to do to get that is click on, let's see, double click on the line here of the fib, right click on Fibo properties. Then behind each description, each of these levels, add a space, percentage sign, $sign. Do that for every one of them, and the percentage $sign will show the price level of that particular fib ratio or fib target. Great. Yeah, not too difficult indeed. A fib is invalid. Well, that depends on waves, unfortunately. In all honesty, waves and fibs do go hand in hand. Depends on the structure of the wave. If we have a 1, 2, 3, 4, 5, and we put a fib on the wave 1, like this, the validation level is the 100% level. If we put the fib closer to price, it's possible we want to squeeze in and sneak in a tighter stop loss, right? So we get a better reward to risk. But that's the risk. The risk we take with this is that we're putting it at a spot where really price is not invalidated. The real invalidation level in this case is this 100% level. Now, it depends. Sometimes I also put it closer, or I put it just below the 78.6 fib, or just below the 61.8 fib. Mostly because there's a candlestick pattern at these fibs, and I would, estimate that the chance of a bounce is very high. So using a tighter stop loss then makes sense in some cases. So, but that's when the fib is invalidated, the 100% level in this case. Now, once you get a wave 1, 2, 3, and you get a wave 4, the invalidation level is not the 100 level. It is actually when price gets into the wave 1. Often enough, wave 4s will stop at the 38 fib, 28 to 23.6, max 50. In this case, typically when it goes below the 50, there's big question marks whether it is a wave 4. I wouldn't say invalidated, but it's close to being invalidated. If you're in a zigzag, it's the 100 level. If you're in a flat, actually it's the other way around. If you're in a flat, all right, and you have an upside and you have a correction like this, the invalidation level is actually when you have an upside like this and you get a flat like that, it's the 138.2 fib, not the 100. It can actually break the top and still be a correction. Now you can use fibs, of course, without waves as entry tool, as a supportive resistance tool, even for patterns, like waves, of course. And they do work very well hand in hand with waves, though. Yes, indeed, the lower it gets, let's say here, or it depends how you look at it. In this case, if we have price moving up and price moving down to retrace it, as it gets lower, right, each time it breaks a fib, of course, there is a higher chance that the next fib will be a bouncing spot, typically. If you're not sure whether price will really bounce at the 50 fib, then it's better to use the wider stop loss with the invalidation level. If you're not sure if you're trading in the right direction, then I would say don't even look at the fib as yet, but try to analyze the market structure. Try to look at the trend first. And see, are you trending or are you, maybe there's a reversal, right? Josip, I'm not sure if you saw the video yet, but Josip from Adam Marcus Croatia talked about his reversal strategy using price action and one simple 50 fib. So that could be maybe interesting for you, Z10, to check that out. If you're not sure about whether price will be bouncing at a fib, you can wait for a reaction like a candlestick pattern at the 50 fib. Can we cover DAX, FTSE, and S&P? Let's see, DAX. So yeah, let's dive a bit more. It was very quick what we did. DAX looks like it's breaking out of this triangle. Certainly we have a lot of bullish momentum. And I would argue that we don't really have divergence. No. Yeah, that does not necessarily have to arrive on the monthly chart, but it is important to note that there's no divergence there. Weekly, no divergence either, and it seems like we're breaking out of the resistance trend line here that was connecting 3 points. Plus we have good momentum here. So we're making now a kind of correction here above that breakout and above the 38.2 fib. For the moment, this is a bullish environment. This looks like a bullish structure. It might fail. There might be fundamentals behind the Eurozone that could affect all European stocks. The banking sector, as you might know, looks like it's struggling and looks like it's having some problems, right? All those things could change the technicals here easily. If there's bearish news, price could break below the 38.2 fib and start falling like this. In that case, this was a false breakout. So for me, very key is the 38.2 fib, but also the 50. And whether price can get back below the trend line and back below under those support levels. And if it does, there could be a fall of between these fibs like this. And eventually, it would need to break below this trend line before we probably see bigger gains to the downside. Or gains, this is maybe the wrong word, but I should say bigger losses probably to the downside with the DAX. So be aware of this fib, I would say, and the trend line, and then there could be those bearish moves potentially. At this moment, though, that put aside, as long as it stays above this zone and it's traveling like this, it is looking like a bullish pattern, a bullish continuation pattern, and I would expect a break and a move to the targets. Right here, it does not seem interesting to trade to me. Could have been a bit different, maybe just at or close to this fib. Right now, it is right at resistance. I think the only thing interesting would be if a daily candle does show momentum like this, breaks, closes near the high, shows a good momentum candle. The other alternative would be if price maybe dips again down here, shows kind of like a inverted head and shoulders, shows weakness here, and starts to bounce. So those are the only two things I have in mind with the DAX. Looking at this time frame, 4-hour, 1-hour chart, I really don't have much to add. We do see some bearish candles here on a 4-hour, which means that this retracement back to support before it bounces might happen. Sixth candle was bearish. this could be a retracement for a down move down to support. It's a risky one. There is a lot of momentum to the upside here. So far, price has been just making a bull flag and respecting the 38.2 fib. Yeah, it's I still think it's a higher chance it will make a reversal like this. Back to support, but it's a pretty good pin bar. So let's see. I think that if this kind of closes near the low like this, could be that extra confirmation, maybe a bit of retracement. I think that there's a good chance of a correction lower, but time will tell, I guess. The invalidation level, though, I would say definitely this top, right? If it breaks above that, then we're not getting the zigzag here. Next one, DAX. We talked about, so next one, S&P 500. S&P broke these tops. Of course, big consolidation here, and in all honesty, I was expecting a zigzag correction. We didn't get that. We got a flat correction price using the bottom here, and it was not able to break it, use it as a bouncing spot. Made another bounce, then hanged around here basically, and then broke. So it was a complex correction. Eventually, I did expect a break because of the fact that price was bouncing here several times, did not break the bottom, and was hanging here. So it looked like a sideways zone within after a bigger uptrend. So not surprised to see that. Now, basically using that broken resistance as a bouncing spot. All right, another triangle. So I think either a breakout here to get one more higher high, but then there will be multiple divergence. Or if it breaks the triangle and breaks the previous top, yeah, there could be that. Let me get rid of this here. There could be a bit of a bigger retracement. Now, that could be just a minor retracement. I don't want to call a big reversal yet because I think it's too soon. But if it does break, there could be a zigzag down to the minus 61.8 target at 2055. And then we'll have to see. If it bounces, there's plenty of support levels and the target. So all in all, very cautionary here, I would say. Huge consolidation, huge complex correction. There is divergence, of course. If this week ends bearish, I wouldn't be surprised to see that zigzag next week. FTSE. FTSE really taking a high road here, really moving up a lot, challenging this top again here just before the Brexit. And wow, what a push, right? Brexit bringing some downside, but quickly reverting and moving back up. So let's see how it responds to this top, this resistance. A weekly close this week with a strong candle. Yes, it might continue with this impulse. A failure here, big wick, could simply mean a smaller correction at first. So nothing much to say about this for this week. I think it depends on the reaction of this weekly candle compared to that top. Mind you, I don't trade these myself. I am practicing on the DAX a bit. But I trade mostly Forex, sometimes some commodities, but mostly Forex. Although, as I said, I am trying out the DAX now for the first time. All right, so Eurodollar shorts 111.40. Close those shorts. Great. That's excellent. Oh, sorry. You just closed it now, or did you? Sorry, I misunderstood. Sorry, Dogan. I thought you closed them at 111.40. Misunderstood. Yeah, that's annoying. Sorry about that. I can see how tempting it was to trade it. I mean, the dollar was strengthening. The euro was a fluke. Was the only one that didn't. Oh, you closed them yesterday? All right, then I did understand the first time the right way. Okay, excellent, great, good job. Here we didn't have a good break, I think. In any case, if the break was there, then this was definitely a pin bar. If this candle closes like this, by the way, two bearish wicks here, I wouldn't be surprised then to see that zigzag that we talked about. Alrighty, let's take a last look here at pound. Let's see, 1, 2, 3, fourth candle now. So there's a good chance that this momentum is over. I think if the next two candles do not break, I would like to see a little bit of a hook back here to get that W pattern and then the ABC up. I think that starting to become a bit more realistic now. Dollar yen, same story, nothing changed really. Kiwi is bouncing once again here too, looking for the correction up to 72, 72.20. Your dollar could be in a zigzag. Dollar yen looks like in the wave 4. Pound out would like to see retest 67.20, 67.70. That's about it, folks. This is the ACU method, by the way, that Nennet developed. Yeah, that's about it. So if you have any questions, please let me know. We got new webinars next week. We got a lot of webinars scheduled already. We got webinars soon. Today, we got webinars scheduled all the way to the end of the year. From, looking at the U.S. presidential elections next week, not next week, sorry, next month on Tuesday, the day of the elections, Tuesday the 8th, but also 1 week later on the 15th, and looking at forecasts based on that. So a lot of different topics. Hope you can check those out. Those are pro learning lab webinars, educational webinars. But we also have, of course, new strategy webinar next week, and then it's price action trading school, and Ichimoku Haikenashi next week. Sorry, that's next week. And let's see what else. Patterns, two series webinar on patterns, by the way, next week. This week we have keeping the brain sharp during trading. So some practical tips there to stay focused on the decisions in front of us. And besides this, obviously also, besides these webinars, the Zero to Hero series, 20-minute videos, well, sometimes a bit less, sometimes a bit more, but roughly between 15 and 20 minutes. Very concise and practical stuff there. So, all right, no questions. Thanks for being here. Wish you, above all, good trading. And we'll talk to you soon, folks. Cheers.